Good afternoon, everybody. I've been asked by Peter to give a presentation on what investors want to see in business plans. As an introduction, I've spent the last probably 15 years in the area of renewable energy and energy efficiency. Most recently, or my current work is with the French Development Agency. So I've seen lots of business plans, and hence he asked me to sort of give my observations on this. People, when they start writing a business plan, they sort of get onto the task as if they were writing a novel, and really your CVs become the heroes of the show, and you tend to write really long stories, and at the end you're like, I'm done, right? As if the actual thing that needed to be done follows from the business plan is forgotten. It's like, I've done my business plan, I'm done. You know, it's like, and please don't correct it. What I've seen in business plans, typically first versions of this is that there's about a half of what's in there that is reality, that is worthwhile. Then there's 30% fiction, or what I call exaggeration. Then there's fantasy about what will happen in 15 years' time with this business. And then people love their headings. I don't know, they spend, especially engineers who don't know marketing, spend lots of time on headings. I have so far not seen a single business plan that has won the Booker Prize or any other kind of literary prize. Typically, your material is only worthy of a short story. It shouldn't be a novel. Typically, you're incredibly repetitive when you write these business plans, and you have to remember your reader doesn't want to read the same sentence over and over again. You mix up things like executive summary and introduction, and you repeat the introduction and the executive summary. So I read the sentence on page 1 and I read it again on page 2. You make some changes, occasional eloquence. Typically, what always amazes me with the business plan is that nobody's actually figured out how to end a business plan. So it just stops at some point, and you kind of go like, did they forget, page? Is this the last page? Or then you have this page intentionally left blank sometimes. But it just stops, and you kind of, as an investor, you wonder, why was it written? So you kind of can work out, yeah, there is a business somewhere in there. They do want money, that's usually why they write these things. And they've got some sort of plan, but it wasn't worthy of this thing that had to be printed out and put on my desk. My personal preferences, this is training that I received at particularly the African Development Bank, where they have size restrictions. Things cannot be longer than 10 pages. And if you are explaining an incredibly complicated thing, but you've only got 10 pages, so you start with the fonts, then you start with the line spacing, and if it still doesn't work, then you go radical, and you go, okay, let's take all adjectives out. Let's take all adverbs out. Let's take all inflation out. And then suddenly you find that your sentences are actually clear, concise, and you have to say, like the simple sentence. When people learn a new language, you ask them, please don't make these long sentences because you'll mess it up. Start with subject, verb, object, and leave it at that. So forget adjective. So I prefer those, and most other people that are in the same profession of reading business plans also prefer those. So we actually get quite excited if we find something that is precise, honest, doesn't have any adverbs. So we get excited about precisely the opposite of what you think we get excited about. Another thing that you need to know is that when your business plan gets into the hands of a fund manager, an investor, a banker, it looks totally different than how you conceived it, because they don't get it like this. They get it printed four pages on one page. They need special glasses to read even your writing. It's all in black and white, so all your color disappears. Whatever you had in gray and shades of gray is now just a blur. So all your fancy stuff goes away. It just gets... the best thing to suggest to you is take your business plan, reduce it to 4 pages per page, and send it through a fax machine, and then read it. That's what it should. It should be able to withstand that test. Content-wise, get to the essence right away. Explain to people that you want money and why you want the money. Most investors don't want to hear long stories about how you got to where you want to be. Use structures, diagrams, and pictures. And when we mean pictures, it's not landscapes. So it's not added design. It's valuable information in the form of pictures. So don't forget your audience. I would like to say that I'm like one of the people who would read this business plan. Don't spend a page talking to me about climate. I know the story about climate change. Okay, so don't bore me and don't teach me anything. A little bit about venture capital investment. Now understand how this works. Somebody is giving a bunch of guys, girls, call them 4 or 5 investment professionals, money to spend, okay? An enormous obligation. Just think of it as your mother's giving you money to spend. But it's not just a little bit of money, it only makes sense if they give you like $100 million, okay? So now you've got $100 million to spend, and you have to be really careful what you do with it, because if you lose that money, they're not going to give you any more, that's for sure. So, so you build some structures around you to make sure that you don't get conned. So literally, you've got here the entrepreneur, you've got an investment officer, and then these are the structures above. These are the people that help you, that ask you questions, that drill you, that make sure that you don't make mistakes when you spend that money. And now you have to put yourself into this person's shoes. He's reading your business plan, and all he thinks about is, can I sell this to these people? Okay? So is it simple enough to explain to them? I might get it. I have to present it now. So he has to do exactly the same thing that you have to do. He has to shorten it. He has to make it 10 minutes, put it onto one piece of paper, get it in there. You can help this person tremendously. Just do his job for him. Okay? When you send business plans in electronic format, send it in Word, not in PDF. PDF is great. Word, you can do copy-paste, which helps the investment officer tremendously, because he can just take your stuff and write his stuff. Your business plan becomes sort of one of many documents. It's the starting point. It can lead somebody to write to you, hopefully, a draft term sheet for an investment. This will require that you acquire some of the knowledge and of the language that is being used there. And I, as the business plan reader or the investor, would love to see you understanding that knowledge, that language when you write a business plan. So if you have some familiarity with the terminology that we use, you're already a big friend of mine, as opposed to if you're using completely non-investor friendly technology, language. So draft term sheet, you sign it. So you say, I like this idea. They want to give us money. It becomes an investment recommendation. Then that's another document. Then it becomes an exercise in due diligence. That's when they dig up everything that you said was true. They ask you to warrant to be true. And then you hope that it is actually true, what you said. That's why it's quite good to actually start without the fantasy part of your business plan, but only with the true part, because otherwise it just stops here. And then you get a final term sheet, you get a whole bunch of legal agreements. All of this, by the way, if somebody says, my business plan is ready, you can give me the money in a week or two, I'm ready. Understand this alone takes a good 6 months, this whole process. And that's if your business plan is wonderful and the people really love you and it's a wonderful deal and they have the money and so on. 6 months to get money. It always takes much longer than you expect. So which ones do we like? We like those that understand over the 6 months period, we will get to know your business. You know, so it's not, there's no rush to put every little detail into this document that you're creating. So we want to get some that cover the essentials of the opportunity that you're presenting to us. Because we are there essentially for the money. We want to give you money in order to get money back. So tell us what the business opportunity is. Tell us how you will use our money. Tell us who you are. Tell us your timetable, because sometimes that gets completely lost in these stories of business plans, timetables. Tell us how you imagine the capital structure to be. So if you've watched The Dragon's Den, it's like those guys sitting there with the bundles of money, and I'll give you this amount of money for 20% of equity or 25% of equity and so on. Underlying all that is a concept of valuation and so on. The show is a bit of a misnomer for venture capital. I don't think anybody does investing like this. But it gives you an idea, so watch the show so that you at least see that you can do the calculations in your head as well. A lot of your projects, I'm presuming, will be project financed. Once you get into the whole realm of project finance, you find it's a completely different language, it's different people, it's debt providers, it's very complicated spreadsheets. So not just your 5-year, it's debt profiles, it's ratios, and your equity investors become secondary to your bankers, and you have to get to know the project finance bankers very well. You have been asked, I just noticed that, about risks and risk mitigation. We actually take that very seriously. And you may find that, yeah, but I can't think of a risk. Okay? Then you need help if you can't think of a risk. If you can't think of a risk mitigation, admit it. Okay? If there is a risk but you can't think of a way of getting rid of it, admit it. We prefer that you can think of it but you can't think of a mitigation than that you don't mention it. So this is not an exact science, writing business plans. Having an idea of valuation is quite important. I'll come back to that. And then understanding that equity investors are not there forever. They are, when they meet you for the first time, they're wondering about the time when they will shake hands the last time with you. So we're a strange bunch. And when you write something into a business plan, use facts, use evidence. So I went through these a little bit more detail. And opportunities fulfills a specific need. I just heard about a pesticide that seems like it has a particular need. Mitigates climate change. So this is what is adapts to climate change for the purpose of this workshop. Your business case is more important than your projected IRR. Most people guess, okay, on projected IRR. They think, you know, if it's a venture capital investor, they will want to see 25% equity IRR. So then they play around with the numbers until they get to 25% equity IRR. So it's usually not the way to do it. We want to see a lean management team and a qualified one, and preferably no additional secretaries and office administrators and so on. That doesn't make us feel comfortable at all. And we want a financial model, and we want you to spend quite a lot of time and effort on producing a financial model. So it shouldn't be a one-page picture insert in a document that I can't play with. It should be a separate Excel spreadsheet that has assumptions in it, that has drivers in it, that shows me cash flows, that shows me sensitivities. We're asking you to become financially literate, essentially. We want valuations, but we don't take them too seriously. So pre-investment at this early stage, your valuations are typically not taken seriously. So if your valuation happens to be what we think it's worth, then we like you better. If your valuation is way above what we think it's worth, then we think you're a dreamer. It's going to be a difficult negotiation. Do we really want to do this? You're going to be disappointed even if you get the money because of the valuation, etc., etc. So it's best to put yourself into the investor's shoes and imagine you're now putting your own money into this. What would you consider to be real risks? Would you be putting this in, and what do you want in return? And you are the developer, so at the moment you're sitting with 100% because you've put your sweat and your money into it, so you want everything in return, right? Now, if we put our money in there, we also want everything in return. So we have to find a happy medium about that. We're only interested in valuations, by the way, right at the beginning and right at the end, when we want to prove that we have added value with our money to your project and that we can exit out of this at a higher valuation. Please always know why you're asking for money. I think I've heard that already as comments. So sources of use and uses of funds, pretty nice tables. We like those. We also want to know when you want to, when you need funds. Because what we're going to do is we're going to say to you, you know, obviously you're not getting all the money up front. You're getting it as and when we feel that you have passed certain milestones. So we're negotiating already about giving you, you know, trickle feeding money into it. So give us that option by telling us when you need the money. Don't put, this is not a building project typically, so there's no need for you to put contingencies into it. So I wouldn't want to see a budget that says at the end, oh, that's the number plus 10%. And the 10% is just there because we're not sure it's right. Okay? So don't build cushions into it. That's not a good idea. Because we take them out. Yeah, some comments about the knowledge of certain things that will happen in the future. You know, it's when you build financial models, make sure that you're not pretending to know something that you don't know, and that if there is something that you should know because it's a large number, then make sure that it's the right number. Okay? So you don't just build a model for the sake of building a model. You build a model because it's the right model. Timetables, we love timetables. How long will this take before X happens? Where are we now and what do we need the money for? So these timetables can be very useful in business plans, make them much more readable. Because I start at the beginning and I'm hearing history and I'm trying to figure out where are you at? So if you have such a graphic and suddenly I can see, oh, you're here, then I know whether I'm the right investor, which is early stage, or whether you're already like 5 years down the track and I'm the wrong investor because I'm an early stage investor. Okay, now I'm getting into a little bit of the language that we're using. So if you understand sweat equity, cash, Series A financing, Series B financing, if you understand the different ways of financing, then you can start talking to us right now as equity investors. If you don't understand them, then you better understand them by the time you come to talk to us. So otherwise it's going to be a very strange conversation where the equity investor suggests a structure, you have a blank face, and then the equity investor has to explain a structure. You don't want that to happen. You want to be at par with the investor when you at that point. This is just a slide that explains how an investment would look, and you could see, theoretically you could say that's a pre and post investment structure that I imagine. Okay? So this is how it was before. We'll issue new shares, we'll give them to the VC fund, and that's what it looks like afterwards. These pictures are very helpful for investors. This is sort of a project finance type structure. In this scenario, you would be the developer or the owner, and we as investors would be sitting with you. We would create something that is a special purpose vehicle that just does the one thing that it's supposed to do. It has, on the one side, suppliers, and on the other side, so it's inputs, process, outputs, and it has banks at the bottom. If you start out and you have a project finance type structure like you suggested you had, if you start out with a graphic like this and then go into detail on every one of these elements, it'll be much easier to structure your project. Typically in a business plan, and I've heard the term grant, we expect to get X amount of grant money. That's like saying we expect to get gifts. At Christmas, yes. Okay. Yeah. In a business plan, no. We expect to get gifts. It's a kind of strange way of presenting a plan, because you're not giving it to me so that I can give you a gift. I think you describe a capital structure in terms of equity and debt, and then we say maybe we could get some of the equity as grant funding, or we're hoping to get it. We don't expect it. We don't. We're hoping. Yeah? Sort of make people feel better, especially the grant providers. Typically, these projects are a whole bunch of agreements. And this is also where a lot of you probably don't know the value of having project finance lawyers the value and the complication of having them. But each one of these agreements can be either in the format of a letter of intent, or so-and-so sent me an email and said it's okay, or it can be an actual legal agreement. Typically, you want to have a whole bunch of pre-financing agreements, meaning they explain the status in which your project is, and they are contractually binding. And then financing agreements, they relate to my relationship or the equity participants' relationship with the project and the debt participant. And then you have a whole bunch of licenses and permits. So for us as equity providers, as much as for the bank as debt providers, we want to know where you are at, and that you understand that you need all these agreements in these projects. Exits. Venture capital investors are known for rushing the whole thing. We want to get in, we want to triple or quadruple our money, and we want to get out. When you write a business plan, we want you to think about what we want, which is to get out as quickly as possible, and to give us avenues that you can think of that allow us to get out. And in terms of these avenues, there's the standard sort of phrase that says we will list this company at some point in time. Now, if your company is sitting somewhere in the forest in Mozambique and it's actually a forestry project, please don't pretend that it will be listed at some exchange in the future. It just won't happen, okay? So find another way. Don't go the IPO route. Don't tell me that in 5 years' time you as management will have access to unlimited funds and you can buy me out. So the MBO route is usually an unlikely one. See if there's a trade sale opportunity. Maybe you can sell this company or my share of this company to one of your customers. And last but not least, treat equity as if it were expensive debt and create self-liquidating mechanisms and say, well, once you've achieved a certain IRR out of this project, maybe you can exit or give us the shares, as a bonus. But be realistic in all of these. So, and do some of the homework for us, because otherwise I'm sitting there and saying, how am I going to get out of this? I can't get into it unless I know how to get out of it again. I think you will probably talk about risks endlessly. Your presentation talks about risks, so just we want to see that. We read them. Actually, it's part of the real fun of reading project business plans. Okay, so what I was trying to get across to you, just to summarize that, try and speak our language. Our language is concise, it's very money focused, it's not flowery. We read lots of documents, so we read them, we want to read them scientifically in a way. So cut out all the verbiage out of your documents. I don't know if people here are particularly technology focused. Whether it's a hydropower plant or a wind power plant, I always get these, or PV plant, I always get like pages and pages of why that technology is better than any other technology. And I'm so not interested. I really am not interested, because all I need to do is to get a guarantee from whoever provides that technology. That's all I want. I want a guarantee. If you say it's that wonderful, give me a guarantee, then I'll buy that wonderful. I don't need pages. Again, we like to visualize data. We like to visualize models. We want you to be comprehensive. We want you to show us structure, also in the way you put down your business plan. Address the risks clearly. And most importantly, when you talk about a fact, give us evidence. When you talk about a location, give us a Google map of the location. We like facts. It's a strange thing. Okay, that was it. Thank you very much.